Okay, so welcome back. This is the final part 4, where I do some analysis on multiple asset classes. Just a reminder, the black numbers in the right hand column, that's support and resistance levels. They're from trend lines that I've added on. Pink numbers, which replaces the brown numbers, pink numbers just because of the clash with pivot points, now identify breakout levels. So it might be a support or a resistance level, but when it breaks through, then the expectation is that the market's going to keep going in that direction. Whereas obviously in general it might break a line, but it could be a false breakout where it comes back. But with the pink ones I put on, I expect once it's broken through that it's going to continue. The claret numbers, they are horizontal levels, just either where I've identified a support or resistance level, or they're based on double or triple tops or bottoms. Okay, so the Dow ended up giving back all of the previous week's gains. It started going lower from Wednesday after the FOMC minutes, and of course then the jobs data as well. So whether it can hold those levels, I've got to be honest, for me I just think stock markets are just too high. But how can you argue against the forces of the markets and that herd mentality? But again, consider options. What I do is to protect myself is I take on options positions rather than CFDs or futures when I'm looking at some of these markets, because it just gives me that guaranteed stop loss by buying the option. Okay, so the Dow, so I've got resistance at 34,702, support at 33,919, and a breakout if it gets down there to 33,448. On the 30-minute, so pivot points are on there. I've sort of stretched it out so you can see a bit more of the data of where the market's been, where it's coming back to, because after that big rally we've had, it's sort of just getting a little bit sort of more balanced. I don't know is the right word. I think vulnerable is probably a better word. So anyway, on the 30-minute I've got resistance at 34,702, 34,382, 34,221, with support at 33,923. Moving on to the S&P, again just sort of ended the week pretty much where it started, and resistance 44.77, support 43.91, breakout support at 43.35, support at 41.19. Then looking at the shorter term picture, here I've got resistance at 44.76, so pretty much the same as the daily, with support coming in at 44.31. Moving on to the Nasdaq, resistance at 15.484. Then I've got a few support lines in there, but again these could get broken quite quickly and easily at 15.026, 14.871, and then if it starts to gain momentum on the downside, I've got a breakout level at 14.251. So here it is on the 30 minutes. You saw that sort of end of day sell off, and then it consolidated for the last couple of hours. But I've got resistance at 15.360 and support at 15.170. Moving on to the small caps, the Russell 2000. I've got resistance at 19.20, 19.07. support at 1836 and 1798, which I've got again as a breakout level if it should get through there. On the 30-minute chart for the Russell, I've got resistance at 1891 and support at 1870, but that support line again is a breakout level if it should break through it. Couple of currencies, so starting with the pound against the dollar. As you can see on Friday it had that big rally. You know, to me, I just feel that the pound's a bit overvalued at the moment rather than undervalued, but remember that's just my take on it. And you know, of course it seems to be more dollar weakness than it does pound strength, but it's giving that pound a higher sort of level than I think it should have personally. But remember, that's just my personal view, not a recommendation. Resistance I've got at 129.36 and 128.75. I've got support at 126.30 and 123.13. On the 30-minute, I've got resistance at 128.53. I've got support at 128.23 and 128.08, but they're both breakout levels. So if it breaks them, they're going to, in my mind, it's just going to keep going lower. And then support at 127.30. Now we're looking at the euro against the dollar, and here on the daily, again you see sort of a very similar long candle on Friday as you did on the pound against the dollar. Just again sort of reinforces the fact that it's dollar weakness coming through after the data. So I've got resistance at 111.23. I've got support at 108.65 and 106.73. You know, for me, I still believe that the euro struggles to stay above that 110 to 111 level. Moving on to the 30-minute, I've got resistance at 110.10. I've got support at 109.83, but it's a breakout level. Below that, 109.66, another breakout level, and then 109.10 as a support level. Bitcoin just ranged for the week, didn't really do too much. It did finish with a doji though, so you know, that does indicate indecision. So resistance 31.888, support 28.235, although that is a breakout level if it should get below that. On the 30-minute, I got resistance at 30.559 and support at 30.272. As usual, I've kept in the Bitcoin Nasdaq correlation. They both move lower, ending down on Friday. It seems that that correlation is sort of converging slightly now. You know, it's more of a positive relationship for the moment. Here we're looking at gold. You know, again, did have bits of a sell-off, but didn't really get too far. It sort of really wanted to go through 1900, but the buyers came back in, and it had a rally on Friday. So resistance 1955, 1941, support at 1907. I've got 1895 as a breakout level with support again at 1848. On the 30-minute, I've got resistance at 1934. I've got support at 1915 and 1908. Last but not least, oil. As you can see, it finished definitely at the week's highs. and here we sort of had that rally going on after OPEC with their cuts and more intention of just trying to boost price as much as they can. So I've got resistance at 73.97 and support at 70.49. On the 30-minute, I've got resistance at 73.77 with support at 73.60. So as you can see, you know, that one of them is going to get broken very quickly when it reopens. And then I've got two breakout support levels below, 73.19 and 72.50, with support at 70.21 as well. You know, if it stays up and it does start to move up, then we may get back into that old range of 72.82 again. So it's just a matter of whether it can sort of maintain that momentum from Friday. You know, you got OPEC plus, and also you got that weak dollar, which, you know, does seem to have given oil its push up. You know, it's finished pretty much at the highs for the week for sure, but oil does remain nervous, and you know, less potential rate hikes could give it a further push, and of course, you know, there's a chance that that could happen, but also if there's more hikes, then that again could push oil lower. So at the moment it looks as though the new range could be 69.74, and then, you know, we'll have to see where it goes from there during this next week. But you know, it's pretty much seems to be moving in sort of $5 clips, if you like, so for the ranges, and then you get those breakouts. So whether oil can maintain these prices is really going to depend on the economy, but OPEC is certainly doing its best to get them higher if they can. Right, so that's the end of the analysis. Again, just going to finish with a little reminder of our services. So daily newsletter, you know, we're just trying to give you current insight on what's going on within the markets on a daily basis. So global news, you know, we give you the headlines and we give you the stories behind those headlines, and quite often there's a little bit about my views as well. We also offer as a service chart levels and pivot points. Then course-wise, we've got one-day workshops, you know, just to help you decide whether trading could be for you or fill in gaps that you may have. A one-week course, which is going to leave you starting, you know, it gives you those solid foundations to build your course on. And if you've got that in a trader, I'm going to find it. If you're really serious about turning trading into a career, then our 4-week guided learning one is for you. You can either do it as a comprehensive accredited masterclass, or you can take it as a flexi course masterclass, where, you know, you can come and go as the weeks are listed, as and when you want to. And one of the 1-week courses and the flexi masterclass also include a free trading challenge. And of course, that's in the hope that you will qualify and gain that funded account. You know, why use your capital when you can use someone else's? Trader mentoring, you know, if you've got any gaps or you need help in any specific area, I can do that. Consulting, we consult to companies for FX and commodity exposure. We provide a massive trader educational content, individuals, exchanges, brokers. I do lots of webinars each month now as well for different companies. And of course, as I mentioned earlier, that funded trading account. You know, if you don't want to do a course, you can go direct to them, and there's a link so that you can just go straight into that. But, you know, the idea of the course is to prepare you, get you ready, get you as ready as we possibly can to increase your chance of qualifying. If you've got any doubts whatsoever, then you can reach out to us at info@cymaxfintech.com, or as usual, you can question me, chris.tubby@cymax-int.com. So that just leaves me to wish you the best of luck for this coming week. Hope you have a great week. you know, if ever you've got any questions about the markets, whether it's technical, it's fundamental, whatever it happens to be, or you want to know obviously more about our courses and what we do, then feel free to reach out to us. We're happy to communicate with you, have a chat with you even. You know, for me, I just love talking about the market, so happy to do that. And of course, you know, if you're not sure which course may be right for you, happy to have a conversation to help you. So very best of luck, have a great week, and hope to see you next week. Bye for now.